Hi everyone, welcome to Logical Investing with Shubhendu. In today's episode, we are going to talk about another stock from the ferroalloy space. You might be thinking that Shubhendu, why are you talking about ferroalloy so much? Why are you so bullish on that sector? I would like to say that this space is a hot space as per me. And in fact, 2.5 months back, we created a video on this channel which was on Sham Century Ferrous. The stock was trading at around 14-15 rupee levels when we started making a video on it. We tried to analyze its fundamentals. From that level, the stock has almost doubled in the last 2.5-3 months. If you have not watched that video, you can take a look at the link above and then you can go through that video as well. The ferroalloy space continues to look very attractive to me. Ferroalloys, steel, long steel products, all of that continues to look very attractive to me. So I would like to continue to start looking at companies which are operating in that space, which are fundamentally good, which are making good profits, which are having good capex plans, and are also having good operational efficiency. With these parameters, I started looking at some of the other stocks which are available in the same sector, and then I also found another stock which is incidentally having a similar name, though the companies are not related. The company's name is Sham Metals and Energy. Alright, it is a leading integrated metal producing company. It's based in India with a focus on long steel products and ferroalloys. The company is one of the largest producers of ferroalloys in terms of installed capacity in India and has the ability to sell intermediate and final products across the steel value chain. Now, for all of the folks who are visiting this channel for the first time and probably are not aware of what is the utility of a ferroalloy, I would like to say that ferroalloys is an important constituent in the process of manufacturing of steel. One thing to note is that Sham Metals and Energy is the fourth largest player in the sponge iron industry. It has a very diversified product mix. The company is primarily engaged in the production of long steel products such as ferroalloys, 31% of revenue, iron pellets, which is 9% of the revenue, sponge iron, which is 25% of the revenue, and steel billets, TMT, these are bars which are used in construction sites. Structural products, wire rods contributed 15% of the revenue. The company is planning to further extend its product portfolio by new launches such as a blast furnace, ductile iron pipes, aluminum foils, and so on. Sham Metals is among the largest producer of ferroalloys domestically with an annual installed capacity of 0.21 million ton as of February 21 with a 6.6% share in the capacity. The company has 3 manufacturing plants located in Sambalpur in Odisha and Jamuria and Mangalpur in West Bengal. Its manufacturing units have aggregated installed metal capacity of 5.71 million tons per annum. The group's manufacturing plants are in close proximity to mineral-rich belt of iron ore, manganese ore, chrome ore, and coal. When you are in the close proximity, your logistics are well under control and you are able to achieve operational efficiency as well. The company has also long-term linkages to coal and chrome ore with Mahanadi Coalfield and Orissa Mining Corporation (OMC) as well. The company has an integrated power plant. It has 8 captive power plants with an installed capacity of 227 megawatt as of December 2020. This power, all of this power, 227 megawatts, this power is non-fossil fuel based, such as waste, rejects, gas and heat that is generated by the manufacturing units. The same is utilized to produce electricity for the operation of the manufacturing plant. So it's a very good thing that the company is able to use the energy which it produces into its own plant. And also the company has done very healthy forward and backward integration to enhance operational performance. The company further intends to integrate its operation by using existing waste byproducts to introduce high-end margin products. The company is exploring possibilities of inorganic growth as well, as they intend to acquire distressed steel plants and integrate them with their operations by increasing their production capacity from 5.71 million tons per annum to 11.61 million tons per annum by 2025. Now this says 3 things about the company. One is the company is definitely growth focused. The company consistently is trying to increase its production capacity from whatever they have today to almost double by 2025, which is a big thing. Second is the company already has a very diversified product base and it is still trying to do healthy forward and backward integration so that it has much more larger diversified portfolio of products. And the best part, which is the third point which we come to, is that whenever all of this manufacturing continues, right, there is a lot of waste energy which gets generated, and Each of this energy is then channeled back into the manufacturing unit so that it mitigates the need to purchase additional power. And because the company has different captive power plants which has 227 megawatt installed capacity, that also is helpful in reducing the overall cost of manufacturing of its products. The company had its IPO in June of last year, June 2021, and we can see here in the 1 year chart that the prices were hovering around 376. If you see, the overall price has been almost flat. If you started at 376, we are right now at 367.9. So it has kind of a flat move. Not a lot of people would have made a lot of money on this stock yet, even though the fundamentals of the stock is really good. It looks really good. It has good expansion plans and so on. Now, if we start looking at the financials of the company, we can see that the current price trades at 368 with a book value of 200. The market capitalization of Shyam Metalics and Energy stands at 9,384 crores. The overall stock PE is at 5.58, whereas the industry PE stands at 15. So that's a healthy number and there is significant room for growth. The return on capital employed stands at 26.7, return on equity stands at 26.1, which are phenomenal numbers as per me. If you start looking at the overall reserves of the company, for a company trading at 9,384 market capitalization, the overall reserves of the company stands at 4,841 crores already. The debt to equity ratio is very low and it stands at 0.06. If you start looking at the sales growth in the last year, the sales growth has been 96.6%. So the sales growth has been phenomenal. If you start looking at the sales growth in the last 3 years, it has been 19%. Profit growth in the last 1 year has been 214%. Profit growth in or profit variance in 3 years has been 25.3, which is also a very healthy number. Now, if you look at the Altman Z-score, which we always look at, the Altman Z-score should be more than 3. It stands at almost 8, so it is 7.89. The current and the quick ratio, which should be more than 1, currently stand at 3.09 and 2.04, which are very good in terms of the liquidity the company has. If you look at the asset turnover ratio is more than 1, which is again very good for a manufacturing company. So the promoter holding stands at 88.4. and the company has been giving a dividend yield of 1.22. What that basically means is, if you would have purchased 100 rupees worth of stock in Shyam Metalics and Energy, you would have received 1.22 rupees as the dividend. Now let's start looking at the quarterly results. In March 2020, the sales of the company were clocking almost 1,084 crores, which came down in the June 2020 quarter. This was the pandemic quarter after the pandemic hit. In September 2020 quarter, the number rebounded back to 1,335 crores. And December 2020, the sales was 1,700 crores. In March 2021, it was 2,351 crores. June 2021, it was 2,465 crores. And September 2,494 crores. In December 2021, 2,578. Entire last 1 year, the sales numbers has increased significantly from the previous year numbers, where it was hovering around 1,000 levels. Now it is hovering around 2,500 kind of levels. If you start looking at the expenses, they have also gone up by a significant bit, from 894 crores in March 2020 quarter to about 1,953 crores in December 2021. However, the operating profit, if you start looking at, has significantly improved. The operating profit has increased from 189 crores in March 2020 quarter to 625 crores in December 2021 quarter, which is almost 3 times the operating profit has already increased, when the overall stock price has been almost constant. The operating profit margins have also been really good. The operating profit margins were 17% in March 2020 quarter, and then now it has increased to almost 24-25% in the December and the September quarters. If you start looking at the annual numbers, you see that the overall sales in March 2018 was 3,747 crores, which increased to 4,606 crores in March 2019. That decreased to 4,376 in March 2020 because of the COVID year. And subsequently, in March 2021, a year after that, the sales numbers increased to 6,297 crores. And if you start looking at the trailing 12 months data, the number stands at a whopping 9,888 crores. So from a sales of 3,747 crores in March 2018 to a trailing 12 months data sales, which is 9,888 crores. The company has almost made 3x in terms of its overall net sales. If you start looking at the operating profit in March 2018 was about 714 crores, which increased to 950 crores in March 2019. 666 crores, there was a dip because of the COVID year. And then now the trailing 12 months data suggests that the operating profit stands at 2,563 crores, which is great at an operating profit margin of 26%. Now, if you start looking at the net profit, the net profits have almost become 4 times from March 2018, where it was at 424 crores net profit, to 1,681 crores in the trailing 12 months. The EPS has also significantly increased in the last 2 years from the COVID year, which was 14.56 in March 2020, to 36 in March 2021 and 67 in the trailing 12 months, which makes it a really good stock in terms of its growth of top line as well as the bottom line. And the company has also started paying dividend, which is a great thing to see. Now, if you start looking at the balance sheet of the company, you can see that the share capital has also grown, which is a healthy sign. Share capital has grown from 47 crores in March 2018 to 255 crores in September 2021. The reserves of the company, from 1800 crores, it has grown to 4841 crores in the last 3 years. Overall liabilities have also increased from 1049 crores to 1315 crores, which is still okay. There is a marginal increase compared to the growth of reserves of the company. And if you really see, the reserves of the company stands at 4841 crores, whereas the overall borrowings and other liabilities put together, it stands at around 1600 crores, which is a fairly good number, as we also saw in the debt equity ratio above. Now, if you look at the cash flows, which is the real measure of how much money is coming into the bank account every year, after all of the operations are taken care of, you can see that the cash from operating activity in March 2018 was 247 crores. So this much money was getting into the bank from the operating activities. However, the net cash flow, which is the actual money which is getting into the bank, was minus 33 crores. That has increased to 134 crores in March 2021. Now, given the fact that this year they have also done phenomenally higher sales at a much higher operating profit margin, there is a very good chance that the net cash flow continues to stay positive. Debtor days has gone up a little bit from 13 in the last year to 31, which is not good as per me. As long as it stabilizes around these levels, it should be okay. Inventory days, if you see, it has come down significantly from the COVID year, where it had 203 as the inventory days. It has come down to its usual level of 85, 95 kind of level. So right now it is at 98. The working capital days in March 2021 was about 84, which was also good. If you start looking at the shareholding pattern, promoters have 88.35%, FIIs have 0.98%, but DIIs have increased their stake from 2.04% to 2.69%. The public shareholding also has gone up marginally from 7.02% to 7.97%. So this was all about Shyam Metalics and Energy. We looked at the overall company, the fundamentals of the company, financials of the company. But please do not treat this as a stock recommendation video at all. I continue to say this, that every person's risk appetite is different. The purpose of this channel, the purpose of me making these videos is to share my learnings, my approach, my methods with you. I'm sure that when you go through these videos, you will be able to get a lot of insights. You would be able to get a lot of inputs from the comment section, which is a very interesting area where a lot of feedback comes in from all of you. I really appreciate your feedback and support. If you liked the video, please do hit the like button and also subscribe to the channel with the bell icon, so that whenever I create videos, you would not miss any videos. All of your likes actually give encouragement to me, so that I continue to make such informative videos for you, so that we can discuss and become better investors. Happy investing, happy logical investing.